Hello everybody, so this video is entitled MSTR Stock Stretch at 99.99 as I record this, and is this the end for Strike STRK, the first preferred? And you may know, I believe it's yes. The answer is yes. Eventually, I think he will not be doing ATM on STRK, but I'll get to that question in a minute. First of all, folks, so we are at 99.99 on Stretch. All we needed to be back at 100 is a normal market day, or a somewhat normal market day. Of course, early this morning, market open, rumors that there's de-escalation in the Middle East. Rumors that there's talk between Iran and the US, even though Iran is saying it's not happening. Anyways. The point is a lot of hope of not having a Middle East conflict. So you remove that huge geopolitical overhang, and then the markets get back to normal. And when they get back to normal, Stretch trades at 100. When there is no turmoil in the market, Stretch trades at 100. And so I expect Stretch to either get back to 100 either today or tomorrow, if we don't have more Middle East madness, right? Anyways, that's what normal markets look like, and it's great. Point number 2, strategy clearly ATMing right now in my view. The stock is only up 2.2%, while Bitcoin is up 3%. We should be up more like 5%. The delta here likely has to do with the common ATM. And of course, I love this, because who wouldn't want to acquire Bitcoin at this level, right? 70K, 0.07 million is the price of Bitcoin, very cheap. And of course, ATMing is accretive at 1.18. Of course, 1.18 MNAV. So anyways, to me, pretty good day. Pretty good day. All right, let's talk about Saylor giving up on Strike. Well, I hope he's giving up on Strike. I've called Strike before. I've called it too good of a deal. And Saylor, too, in many of his later interviews, he's also called it kind of too good of a deal. And why is it too good of a deal? Because just like the convertibles, it has that perpetual call option that never expires. And, you know, a lot of people arguing, and frankly, I would argue this too, a lot of people are arguing that the risk-to-reward ratio of Strike is just too good. Because when rates eventually go back to zero, you can expect Strike to probably go up quite a lot, because it's a fixed dividend. It's an 8% at par fixed dividend. So if rates drop back to zero, if the treasury yields drop back to the 2%, if the delta is not going to be 6, right? The premium is going to be lower. And so, of course, Strike's going to go up quite a bit. And on top of that, you get the margin of safety from owning MSTR, right? Each Strike share as 10% convertibility to MSTR once MSTR reaches 1,000. And of course, as MSTR goes up, as Bitcoin goes up, this should start to get priced in. So you have lower risk in the short run, and in the long run, you still have good exposure to MSTR. Of course, MSTR should be much more explosive to the upside than Strike. Total return on MSTR should be much higher than on Strike, right? No financial advice, but yeah. But, you know, Strike is just too good. And Saylor confirmed that, of course, and we saw it in the other events section. That's actually the main section of the 8K here. But you know, kind of lower the annex, right? Strike annex, taking it down to 2.1 billion. 2.1 billion from, we were at 20.300 million. 20.3 billion to 2.1 billion, i.e. like many of the other ones. So what does that tell you? That tells you he's probably not very interested in ATMing Strike. Neither is he probably interested in ATMing Strife, by the way, because of the placement, of course, in the capital structure. So that's kind of the point. And I like this very much. I think Strike is too good of a deal. I've called Strike the only preferred that I would consider buying from MSTR. It's too good of a deal, right? Anyways, Stretch. Stretch is simple. Stretch is scaling, and it may be seen risk-off, as evidenced by the fact that we have barely moved. I mean, we've been pretty close to 100 during this whole Middle East conflict. Fear and greed, unfortunately, still in the fear category at a 34. But Stretch, I want to talk about Stretch briefly. Stretch is being adopted by a lot of folks. So we had a Saylor tweet yesterday, Anchorage Digital, another company, adding Stretch to their balance sheet. That's a lot of companies now that have added Stretch to the balance sheet. That could be a major demand for Stretch. And then we have two protocols, two stablecoins protocols, APYX now owning 400,000 Stretch. That's much more than when I started covering this. You may remember. They've ramped quite a bit the purchase of Stretch. Saturn, same, starting with $10 million. So that's another stablecoin protocol, another dollar protocol. And then, of course, you have Stretch also available through Roxum in a DeFi way, right? In a oh my gosh, I don't know what I have today. In a digitally native way, right? On crypto rails, even though Bitcoin's not crypto and Roxum pays you in Bitcoin, it's still crypto rails. So you outside of TradFi. So there's three ways to get Stretch outside of TradFi, right? APYX, Saturn, Roxum, and there's probably a few more ways that I forget to discuss here. So Stretch is catching the world a little bit by storm, whether it is the TradFi world or whether it is the actual DeFi world, or for lack of a better word, the crypto world. I guess I'll use that word, but I don't like using that word too much either. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.